to Liquid Gold, your prime news source for the cutting edge of the crypto economy. November has begun with another exchange hack, topping the already massive list of crypto hacks for 2022. The American Fed raised their interest rates overnight 0.75 basis points. That tanked the stock markets as usual, but crypto seems to be performing a little differently this time. Watch until the end of today's video for some of the latest market trends and insights. I'm your host, Rob Blasetti. Let's get into it. October was not a good month for crypto hacks, and it looks like November hasn't started off well either. Around Tuesday at midnight, the crypto exchange Deribit was hacked for 28 million in Bitcoin, Ether, USDC from their hot wallets. Exchanges typically have a mix of cold wallets, which are highly secure offline storage, kind of like bank vaults, and hot wallets for customers that trade and require immediate access. These hot wallets are less secure because they obviously need to be more available for business, making them susceptible to hacking. They say they are still in a financially sound position, but it doesn't look good for Deribit, especially since they were a big victim of the recent Three Arrows Capital insolvency. The most up-to-date sources I could find show that they had about a $25 million exposure to Three Arrows Capital. Not that bad given the initial claims are around 100 million to the billions. The lesson here is the same as always. Don't leave your crypto on exchanges. These hacks are going to keep happening, and if anything, they are increasing. Have a look at this data from DeFi Llama. It shows that the DeFi hacks in the last few years have been increasing. In 2022, we've seen a record amount in terms of value stolen. You can see the Ronin Bridge hack and the Binance Bridge hacks were some of the biggest we've ever seen, costing $500 million in value from each. DeFi still has a long way to go, but the plus side of this news is that the industry as a whole is growing and learning from each of these mistakes. They're all documented. The exploits have been released to the public so that current and future projects can and hopefully will learn from them. Take a look at how many of the DeFi hacks happened this year. It's been huge. Top of the list is Ronin for 650 million. Ronin is a DeFi bridge built specially for the popular play-to-earn game Axie Infinity. It was hacked for 173,000 Ether in March. The hacker got access to 4 out of 9 of the transaction validator nodes that were running through the Axie DAO, and that's how they made the hack. The Binance Bridge was hacked for 2 million BNB, which was around $570 million at the time. Binance co-founder and CEO Changpeng Zhao has said that the exploit was on a cross-chain bridge, the BSC token hub, which resulted in extra BNB tokens being created out of thin air. The last standout hack of this year was the Wormhole Bridge, which was hacked for $325 million after an error on the GitHub code repository site. The network was exploited for 120,000 wrapped Ether on February 2nd. To carry out the attack, the hacker managed to forge a signature for a transaction that allowed them to freely mint 120,000 wrapped Ether on the Solana blockchain. So here's the thing, these bridge exploits aren't new, they are increasing in frequency. Originally, there was a DeFi narrative that suggested that we might have many different blockchains with many different bridges, and I think these hacks are demonstrating that might not be the way the industry evolves. Unless the general standard really starts to pick up, we could start to see strong specialization in lower level protocols for the sake of security, which maybe is for the best. Let me know what you think in the comments below. If you like this content, please hit the like button and subscribe for more daily crypto news. Meta's Facebook and Instagram are following suit with Twitter and pushing forward on NFTs. They will allow users to create and trade NFTs in their apps, and obviously they'll be subject to the applicable App Store fees. The controversial 30% Apple fee is getting a side note here. That Apple fee is going to make it very difficult for these services. I believe they'll probably drop it pretty fast. A small group of creators will soon be able to mint and sell on Instagram. They're pulling data from OpenSea. Interestingly, Twitter did not mention OpenSea as one of their marketplaces for NFT integration, so it's possible there's an exclusive deal somewhere here. Today, Facebook and Instagram support Ethereum, Polygon, Ethereum Layer 2 solution, and Flow, and support for Solana and Phantom wallets are coming soon. They won't initially charge fees for NFT sales, and they're going to cover the gas fees at launch. Well, there you go. Social media is making a clear push towards Web3, even in the depths of the bear market. This should tell you that these big companies know that crypto integration is a critical feature for the future of these platforms, and that the culture is going in that direction. Overnight, the American Fed raised interest rates by 0.75 basis points. Why is this important? Well, crypto is strongly influenced, or at least has been strongly influenced by the American economy. When Jerome Powell, the head of the Federal Reserve, says that rates are going up to fight inflation, typically the stock markets tank, and crypto follows suit. Inflation has been rising because of all the code money printing now taking an effect on the world economy. So here's a quick rundown. Let's say apples cost $1 to purchase and there's $100 in existence. If we print $50 more, the apple is still worth the same amount, but the money is worth less. So the price of the apple goes up. This is inflation on a fundamental level. The US Fed needs to raise rates in order to combat inflation. This causes short-term pain for the people, but it's like the opposite of money printing. The money printing gets everyone spending, the rate rises lower the spending, which hopefully reduces inflation. The point here is that rate rises trigger market sell-offs and are typically bad for crypto. The higher the rate rise, the worse for the market. Here's the interesting turn of events though. The crypto markets seem to be becoming more desensitized to the rate rises, meaning they are holding more stability over the last few months than the stock markets. Recently, I made the argument that the bear market is starting to die down and that Bitcoin is forming more of a safe haven narrative. It's possible we could be seeing a bottom already around the $20,000 mark. That seems to be a strong level of support for Bitcoin. Keep your eyes peeled, the data suggests a turnaround could be coming. If you like this content, please hit the like button and subscribe for more daily crypto news. As always, these videos are for entertainment purposes only. This is not financial advice, I'm not a financial advisor. I'll see you tomorrow for more daily crypto news.